20146, your SMS line at Metropol TVKE across all your social media platforms. You're watching a Business AM. Thank you very much for taking your time to join us this morning just to discuss the top issues that you're waking up to in the economy. Now, CBK is on the spot as wider losses continue to wipe out Aspire Bank's capital in the year ended December 2020, leaving it with a deeper negative asset base of 1.8 billion and put 4.7 billion shillings customer deposits at risks. Now, the bank, wholly owned by Mwalimu National Sacco, now faces a crucial quest for new capital because its losses have seen it breach all minimum capital adequacy ratios by large margins. Now, the Sacco bought majority shares in the institution in 2015 when the lender was known as Equatorial Commercial Bank. As a rule, all banks must maintain a statutory minimum of 1 billion shillings as core capital. However, Aspire Bank's core capital stands at negative 2.63 billion, meaning it requires 3.6 billion to comply with the requirements of a lender. Over the last couple of years, Aspire Bank's accumulated losses of up to 8.4 billion shillings has wiped out shareholder funds, which now stand at negative 1.8 billion. Now, the lender sank into a 1.2 billion loss for the year ended December 2020 from 472 million shillings loss in 2019. Now, the bank is no longer lending with a negative capital position as loans issued shrunk from 3.3 billion shillings in 2019 to 2.5 billion at the end of last year. It only made 346 million interest income from the government and customer loans and a 54 million loss from non-interest incomes because of foreign exchange positions it took. Now, Aspire Bank's value of defaulted loans rose to 2.7 billion shillings, which is more than its total loan book. Joining us this morning to discuss on this issue is Chacha Richanga, who is a personal finance coach and analyst. We're also joined by Joash Onsando, who is a public policy analyst and political strategist. Chacha, let me talk to you. Good morning, sir.
Good morning.
Fantastic.
Can you hear me?
Yes, we can get you. Happy to have you around. Joash, can you confirm whether you can get me, sir? Good morning.
Good morning, Simba. I can get you loud and clear.
Fantastic. Good. Chacha, let me start with you. I mean, when you look at that, it's a bank that is now pretty much going to be technically insolvent. So, Mr. Chacha, what are your concerns as a Mwalimu National Sacco member and investor? Let me begin with you from that end, because then you have also personal interests that are in the bank as well.
Yeah, thank you, Simba, for that. First, I would like to give a brief background about Mwalimu National Sacco, which has acquired a bank that is now called Aspire Bank. Mwalimu National Sacco was founded in 1974, so it is 47 years old, and it is one of the biggest SACCOs in Eastern Central Africa with a capital base of 57.7 billion shillings. So the SACCO in 2013 was rated as the best in terms of asset portfolio and revenue creation. Mwalimu National Sacco draws its membership largely from the teachers who work with the Teachers Service Commission. In fact, over 80% of the members of Mwalimu and the tertiary tutors. It also draws membership from the secretariat, the employees of the TSC who work in the TSC headquarters in Nairobi. It also draws membership from employees of Mwalimu National Sacco who work in the headquarters and other branches. It has 11 branches countrywide. And also it has members in other sectors, those who were initially teachers working in the TSC and have transited to other parastatals. So Mwalimu National Sacco has a total membership of 110,000 members. Out of the 110,000 members, 86,000 are active ones. So Mwalimu National Sacco has been growing in leaps and bounds. However, lately, Mwalimu National Sacco decided to invest in some income-generating projects whereby now Mwalimu National Sacco in 2015 owned a bank. In fact, the first Sacco to own a bank in Kenya is Mwalimu National Sacco. The bank was then called Equatorial Commercial Bank. It was rebranded and it's now called Spire Bank. This bank, among other flagship projects, has been registering huge losses. As you have said, effective totals are up to the tune of 8.4 billion loan at shillings. So that has raised a number of concerns. One, in the rate of dividend allocation. This year, for the year ended 2020, Mwalimu National Sacco gave dividends on deposits at a rate of 9.3%, which was a drop from 10.5% issued last year for the year ended December 2019. That sharp decline in the dividends has concerned members about the financial stability of Mwalimu National Sacco, because during the year, Sacco increased from 3 billion to 41.4 billion shillings. That is an increment of 4.8 billion shillings just during last year. So you can see Mwalimu made a lot of money through interest from the loans, but here it is giving up a lower interest rate. So in this case, that raises concerns about the management of Mwalimu National Sacco, which was rated in 2013 as the best managed Sacco. The second concern is about the loss of capital through investment. Mwalimu National Sacco has engaged in what we call misguided investments. One of them is the subsidiary project we call the Spire Bank. It's one of the subsidiaries of Mwalimu, and the aim of starting or owning a bank was to generate more income. The core capital it actually goes half. Deficit of 700 million shillings, which should go to the core capital. Quite a bank should have that should go to the core capital, and the capital 8% of the member deposits goes to institutional capital. So to raise these two goals, Mwalimu National Sacco actually started income community project like the bank, which is registering losses. Two, we have the housing scheme. They decided to invest in an housing scheme in Kajiado called the Tisaju housing project, where they pumped over 500 million shillings. And also another one is owning land. They have some huge tracts of land in Thika. All these projects, unfortunately, they are not creating the much needed income for Mwalimu. That now is concerned. Is Mwalimu Sacco being run professionally? We know that SACCOs are regulated by SASRA.
Yes.
SASRA is actually the societies, the same regulatory authority that was created in 2008 by an act of parliament called the SACCO Societies Act of 2008. So SASRA is the one that regulates, gives a license, and offers oversight on SACCOs like Mwalimu. So this now has brought in another problem that we are talking about. Because of the huge losses in investments, Mwalimu members are not getting dividends on their shares. Remember, every member of Mwalimu has a mandatory share capital of 20,000. Yes. 20,000 shillings. Every member of Mwalimu has that. And that goes to the capital reserves. And for that matter, they did not give any dividend on the shares. They only gave dividend on deposits. The 9.3 was on deposit. On shares, SASRA advised Mwalimu, because of the huge losses of the income generating project that are inspired, to reduce the dividends from 10.2 that the SACCO was proposing to 9.5. On dividends, Mwalimu was supposed to give 10.5% on the shares, what we call of the 20,000 I've talked about. 10.5%, that one was withheld and they shifted to the reserves in order to cushion Mwalimu from failing to meet the regulatory requirement of having a statutory amount in the reserve. So that now raises also concerns about even the core capital, the Spire Bank. Remember, Spire Bank is owned by Mwalimu National Holdings. So we have Mwalimu National Sacco, which created now an holding company called Mwalimu National Holdings, which is owning now Spire Bank.
Yes. In
terms of its financial statement, the core capital, as we have learned, it is negative 2.63 billion shillings. And therefore, the bank requires 3.0 shillings for it to stay afloat. That concerns about the management of the SACCO.
Yes.
The third system and the skewed the annual delegates conference that Mwalimu holds annually. And they are the ones who determine the dividends, who make the resolutions. But these delegates are compromised, manipulated, and even intimidated by the directors, the top management of the SACCO. Even the management itself is to be restructured because most of the directors coming from the TSC Secretariat, and many of them come from Nairobi branch. What about these other 11 branches countrywide? That means there's need for restructuring of the Mwalimu management and administrative system. And this delegate system need to be relooked at. So SASRA, in other words, needs to really look at and do its oversight role well. Thank you so much, Simba.
All right, Chacha, let me bring in Josh in as well. Josh, there is a bank involved here, which is a fully operating bank, and there's a SACCO, which is involved here, which is also a fully run SACCO. So two bodies that should actually be regulating this. Who should come in and act? Because when it comes to the SACCO, it looks as if, well, it is operating, and SASRA does know, well, that this SACCO is running properly. But there's a bank here that is called Spire Bank, Josh, which the Central Bank of Kenya should act on it immediately, because you can actually see exactly where they are. The bank is no longer lending, so the major function of that institution is actually not going on, because if you look at exactly where they are, that the defaulted loans are 2.7 billion, which is more than its total loan book. Who should act fast, Josh? Is it the CBK or SASRA in this case?
Thank you, Simba. First of all, let me thank Chacha for such a comprehensive background about the issues in Mwalimu Sacco. I don't think that's information you can acquire anywhere else. I mean, that was pretty comprehensive. Asante, Chacha. The deal with Spire Bank and purchasing what was then Equatorial Commercial Bank is a very controversial one.
Yes.
You'll notice that as soon as Mwalimu Sacco put in 2.4 billion, I think initially in the bank, that capital was diluted by half, so about to about 1.2 billion. And then you have an issue where as soon as Mwalimu acquired the bank, you had a depositors run from the bank of about 10 billion. So withdrawals from the bank of about 10 billion, which means even the initial customers of Spire Bank didn't have confidence in the new management in Spire Bank.
Yes.
And then finally, I think the purchase was concluded, I think, towards the end of last year, when they acquired from Nashud Merali the remaining 25% of shares of the bank. And the whole purpose behind acquiring now full shares in the bank was that they wanted to get a strategic investor to come into the bank and put in money, and so that taking it to the next level, so to speak. And they were in advanced talks actually with a strategic investor. There's a bank in the UK called Block Bank, which I think is a cryptocurrency based lender bank. And Block Bank, I think, was supposed to be the strategic investor who'd come in with a magic bullet, a silver bullet as it were. And that deal fell through because Block Bank ultimately pulled out. And this points to a number of issues. I think What happened is that Mwalimu Sacco failed to do due diligence in this deal with Spire Bank. Right from when it started off as ECB, and even as they rebranded, I think the rebranding was a more cosmetic exercise to try and make this deal look like it made sense. And for me, I get very wary when due diligence is not done, because it indicates to one of two options. Either the management is incompetent,
Yes,
or number two, and perhaps more likely, they are compromised. And so I think as far as the central bank as a regulator was concerned, the sale was above board. I think all the legal boxes were ticked. And so central bank approved the acquisition of the bank. Now I think on issues of Spire Bank, then the central bank has to come as a regulator, because as you said, you have a bank that is unable to fulfill its core mandate, and so that really calls for the regulator to come in and to look at things and perhaps figure out that this bank needs to remain. Did due diligence, and if they did, which I suspect, then was it an issue of incompetence, or was it an issue of being compromised? And you'll notice that even in the media reporting of this story, the director of Mwalimu Sacco has refused completely to engage the media on this story. I think I've seen about 3 or 4 articles where the reporting were going to press. So I think both regulators have a role to play. Central bank has a role to play, looking at whether going forward Spire Bank is supposed to continue operating as a bank, or whether it has a capacity to operate as a bank in the first place. And on the other hand, SASSA needs to look at whether in this acquisition of this deal of this bank, whether Mwalimu Sacco and its directorship played above board, particularly its directorship, and whether they, in purchasing this bank, they in the best interests of the members, including our good friend Mr. Chacha here. Thank you.
Chacha, let me understand again. I mean, because that question has been fronted time and time again by the Central Bank of Kenya. The question is, why does a Sacco need to acquire a bank, a Sacco as big as Mwalimu Sacco? Because, well, you're taking deposits, you're lending, you're essentially a bank. Why do you need to acquire another bank, Chacha?
Okay, thank you. You know, the initial goal of wanting to a bank sounded good.
Yes.
But as to my person, it's a question about whether due diligence was done.
Yes.
The argument is when I meet with the delegates and some of the delegates, that the Mwalimu needed to generate money, okay?
Yes.
Actually, some going to the reserve to boost it is a capital base. And therefore, they became so ambitious, and they went into project, as we have said, owning a bank, which is the biggest project that has taken up much of the actually deposit. The capital of Mwalimu has gone there, and now nothing is coming on board. Then there is the housing project, Kisaju, and this actually they build good houses, 100 housing units to be sold to members, and they were to raise to the tune of 2.5 to 4 million shillings. But this one also has come a cropper, and even the land they bought in Tika. That raises question of due diligence and whether there was incompetence involved. But from inside sources, reliable sources indicated that there was collusion on the part of the owners of Spire Bank and the top management of Mwalimu, because the managing director of Mwalimu, by the time the Sacco was acquiring the bank, was an employee of Merali at Equatorial Bank. Talk of collusion there. There is actually a clear element, and this, as my brother put it, Central Bank of Kenya now, the body that is supposed to regulate and do oversight role, seemingly is actually, in a way, you could say somehow saying things have not gone that bad. But we cannot wait until the SACCO sinks with the members' deposits. Remember a SACCO which is 47 years old and which is the largest in Eastern Central Africa. When it falls, you can imagine the effect it has on the economy. Yeah. So this is a matter of national interest, and therefore CBK should come in. And actually, a bank like a SACCO, really, it's not able to own a bank. Then CBK, we question why did it approve it? But remember, the Cooperative Alliance of Kenya objected the idea of the SACCO owning a bank.
Yes.
But we are told a commission was formed to investigate, and it gave the SACCO a clean bill of health to own the bank. So you can see a lot of underground deals came into play.
Yes.
And this requires investigation, Simba.
Yes. Chacha, just before I bring in George to clear this conversation this morning, who should act fast? Because, well, investments could go wrong. When SASPRA is looking at Mwalimu Sacco, that's fine. They will say, well, that's an investment gone wrong. They didn't do nothing according to Sacco regulations and rules. And even what they're doing right now, not paying that dividend per share, is fine because they will be adjusting. Is it SASPRA to act fast, or is it CBK to act fast on this issue, Chacha?
By the way, what it should act fast is SASRA.
Yes.
According to the SACCO Act of 2008,
Yes.
which formed the SASRA as a body to regulate, to license and oversight SACCOs, it's the one that naturally should do due investigations. And then CPK should come in and find out what has SASRA done. Yeah?
Yes.
With all these complaints, with all members who are disenfranchised, that are disappointed, is the Thank you.
Pretty much. Josh, same question that I want to put across to you. Do you think it's taking too long? We do know what the CBK really wants in the economy. Lesser banks, and we've seen them actually sort of move fast to mergers and acquisitions. Why have they taken this long to act for a bank that cannot actually fulfill its core mandate?
I think you also notice that there hasn't been as much public interest generated around the issue.
Yes.
And it's unfortunate because, this is the largest SACCO in Eastern Central Africa, and the SACCO, to be quite fair. So if the biggest SACCO in the country collapsed, then the signal that sends across the economy is pretty serious.
Yes.
I think again the issue is the central bank going to step in without evidence of regulations not being followed by the bank.
But Josh, by virtue of the fact that the bank can't lend now, that should be an issue for CBK. Yes.
For sure, but the issue then is what action should the CBK take?
Yes.
Withdraw the license of Spire Bank, for example. Should they work with Spire Bank to try and get it back on its feet? Should they allow Mwalimu Sacco time to look for a strategic investor to turn around the bank?
Yes.
Because some of the issues that led, and I told you it was a multiplicity of factors that led Spire Bank to where it is. I mean, the moment it was transferred, the ownership transferred to Mwalimu Sacco, we saw a bank run. Literally, it was a bank run because we had depositors taking out their money from the bank to the tune of 10 billion. I think, again, it's pretty curious that the only person who is laughing all the way to the bank after this deal is a former owner of Spire Bank, Nashud Merali. So that for me is a curious point. That is something that needs to be looked into. But I think the more effective way to deal with this Spire Bank issue would be, number one, for SASRA to investigate the directorship of Mwalimu Sacco and find out whether due done in the acquisition of the bank, number one.
Yes.
Number two, if it wasn't done, was it because of an issue of incompetence? Number three, was it an issue of compromise? And as Chacha has alluded to, there are serious conflict of interest matters that arise that indicate that perhaps the culprit is compromise rather than incompetence. Now, because even if you're talking about turning around this bank, and I think that's why, for example, Block Bank walked out of the deal they had with them, Because for as long as there's suspicion that the ownership of the bank was either compromised in buying the bank or was incompetent in agreeing to buying the bank, then it will be extremely difficult to get a strategic investor on board. So SARSA, I think, has to act fast and sanction the directorship of Mwalimu Sacco in the event that there is evidence that there was either incompetence or compromise. And then on that basis, now it will seem attractive to bring in a strategic investor on board.
Pretty much. We take a short break here on Business AM, but stick around because we're still with Chacha, Joash, and we're going to introduce Tim Kipchumba to the conversation as we ask ourselves a question this morning. Are loans the best option to bail out struggling state agencies in the country? This coming in the wake of the 255 billion loan facility that was extended to Kenya by the IMF. That includes, number one, a 36 billion bailout for KPLC and KEQ, and they also have other parastatals in that list totaling to 9 that they want to be bailed out. Once we come back here on a Business AM, remember 20146, your SMS line at Metropol TVKE across all your social media platforms, hashtag Business AM. I am at Kiangesimba. Let's take that break. Once we come back, more business.